Welcome to Investors Insights. Our topic today is goodbye deflation, hello inflation. This is our weekly commentary to let our clients and our viewers know what the topics are, the noise in the news that could impact their portfolio. And today we've got several items to go over with you. Guys, I really enjoyed our debate and discussion this morning. Thought it was well done. Bobby, talk just a little bit. We've got volatility. We got people out there going, where do we go from here? So talk about that.
Yeah, last week the market traded back. That's no secret. It was kind of a perfect storm last week. You know, the yield of the 10-year Treasury hit a 7-year high. Vice President Pence gave a speech saying the U.S.-China relations are actually getting worse, not better.
Right.
Allegations that China was putting spy chips in their technology made technology stocks really sell off. That's really what kind of got us on Wednesday. And then also the International Monetary Fund lowered their global growth. And so kind of a perfect storm there. And so, it's not a surprise that volatility's been here with us all year. In fact, 5 out of the top 10 biggest one-day Dow point drops has been this year.
Right.
So,
in February.
Exactly.
February, we were having the same kind of discussion.
Yeah. And then looking forward, we're looking for strong corporate earnings coming out the next 3 weeks to stop the bleeding, to stop the storm. And so corporate earnings are going to be the key here going forward until the midterm elections.
But there's several factors there because, we want to be proactive in our portfolios for our clients based on their age, based on where they are in life, their income needs, all these kind of things. So we're navigating through that. And if there's a need to take a more conservative approach based on certain circumstances or within our models, then, we're looking at that. So, but we're also taking the data, and those people who have followed us in our vlogs know that we've talked about, in fact, if you go back to 2014, 2015, our big concern was deflation. And deflation can be a nasty animal, if I can use that term. So, Ashley, you brought up about deflation there.
I did. Actually, part of what we saw last week, Bobby went through a lot of the factors on the surface, but underlying that, we're having a fundamental shift, we think, from the market being of a deflation mindset into an inflation mindset.
Yeah, so deflation, where prices just keep going down, things
Absolutely.
get cheaper and cheaper, and people say, you know what, I'll wait 2 more weeks before I buy that.
Absolutely. Inflation as a model, as we know, is much easier to deal with. So we've got inflation going on because we've got a strong economy and rising. And if you look at that historically over the past 65 years, when you're having rate increase and dealing with inflation rather than deflation, the vast majority of the time, not always, because it's different, there's no guarantee, but the vast majority of the time you get an upwardly mobile market, not down.
Absolutely, and let's connect the dots for the people that are watching here. So in terms of noise and news and what can impact the portfolio, when Bobby said if corporate earnings continue to move up, just because you got rising interest rates, that's not a negative thing.
It's not. And history proves that out.
Yeah. So on that is that there will be those saying with interest rates going up, inflation coming in the picture, the economy could slow, and it could very well slow, but that doesn't mean it's necessarily detrimental. But this volatility could be caused of a change in mindset going from deflation to inflation. Everybody agree with me on that?
Yeah, because we hadn't had deflation in a while.
Right.
We hadn't dealt with it. It makes sense.
And then there are those moments, and then there are trends. And you brought up, Adam, about some things that we'll probably debate as moments and trends, okay? So talk a little bit. We've got elections coming up, true?
Absolutely.
Talk about that just a little bit because that's in the back of everybody's mind also.
Yeah, and going back to volatility, we have the midterm elections coming up in November. The average midterm election year decline is 18%. Now, in addition to that, the S&P has been up 12 months following every midterm election since 1946.
Yeah, so this is where we say there's no guarantee, but in this volatility, people hate to be indecisive. They don't like the unknown, or as we like to say, traders trade on anticipation, investors invest on news.
Absolutely.
So once they know who the parties are, and we're not talking politics, folks, we're just talking good economics, and we like portfolio returns. And I need to say there's no guarantee we'll see it go up, but from a historical standpoint, that's what we've seen.
Yes, absolutely. And in addition to that, too, on another note,
talk about
Sears has filed bankruptcy this morning.
Yes.
Now, in February of 2018, there's reported 90,000 workers. They plan to make it through the holidays. Now, if that isn't the case, you might see 90,000 people come back into the workforce. Now that's a big, big impact on jobs.
Right. Well, and you've got people also that, you would think if they're employed by Sears, they're going to start looking if their company's, in bankruptcy. Yeah. But I want to make one other point is that this could also be the debate, deflation, inflation, but also one of the things that's keeping things in check, maybe more so than interest rate increases, is technology. And we've talked about this in our blogs many times over, that technology can continue to bring business models down as well as change those business models and keep prices down. So we're going to be following that closely as we navigate through these markets. So on that note, we've given you a lot of information today. We appreciate you staying with us as you watch us in your home, your office, on your iPhone, your iPad, maybe even in that coffee shop. The one thing we appreciate is we constantly are getting feedback from people who tell us, Five Plan Partners, I don't know of anyone else that's doing this. I really appreciate the information that you provide. We get it from our clients, the professionals, the CPAs, the estate attorneys, and others that we work with, as well as those people who are interested in becoming clients and who have been introduced to us. So we hope you have a great week. I want to say this, I think there's about 78 days left before Christmas. I think in 90 days we'll be at 2019. There's a lot going on, and we're going to keep you informed throughout all of it. Have a great week.